Hey, everybody. Welcome to Market Mavericks. I'm joined by Mike McGlone and Scott Melker. How are you guys doing today?
Good. Hello.
Good,
Exciting
good.
day.
Yes. Where do we start? Scott, I'm going to give you the floor. Where do you want to start today?
Let's start with Bitcoin because I think it's the most exciting move that we had, right? This is the daily Bitcoin chart. You see this blue zone right here. You'll notice that it goes all the way back to May of 2022. And you'll wonder what happened right around that time. And the answer is Luna. So if you're wondering, the level that we just hit, which is this massive zone right here that I've been saying will be probably the biggest take profit zone that you'll see on the chart, erases all of the 2022 contagion from Luna, BlockFi, Celsius, Voyager, FTX, and all of their cousins, girlfriends, and sisters, babies, and everybody else. So if you're surprised that we got slightly rejected right at 38,000, don't be. That does not mean, by the way, that that's a gratuitous short. Doesn't mean the market's over. It just means you should have expected to see some major selling as it came into that area. Of course, that little drop in Bitcoin from 38 to 35 something, which is pretty big, caused a massive liquidation of longs across the board in the crypto market. We saw some altcoins even drop, 25, 30%. Most of them right into support, though. That's algo, just examples. HBAR bounced right to support. So none of that's scaring me, to be quite honest. I think that this was just a flush out of epic proportions. And of course, happened just as the stock market dropped in Fed Chairman Powell started job owning. So no big surprises.
Yeah. So do you think that that we have a short-term high here on at least some of these altcoins? Like I'm looking at Solana. Solana today made a high near $50. So that's a 40. That was at 49-ish. And then you look at some of these other ones. I think some of the other ones out there. What are some other crazy movers?
Link,
INJ,
Cardano, XRP, Injective. Those are the kind of been the big movers.
Yeah, look at that. By the way, look at that reversal on Link today. Got to 16. It's almost back to 14 now. So do you think these are a short-term top, or you think this is just a pullback before further upside?
I think if you take a look, like I said, open interest, I think, was the highest it's been in years on altcoins. So everybody was leveraged long here. We all know what that means. Rand was actually pointing that out on Crypto Town Hall this morning. And if you take a look at all of these, you're massively overbought on RSI. If that's an indicator that you use, there's Link right there. Injective, God knows, that's massive bearish divergence. You see a lower high there on RSI, higher high on price. All the local top signals are in. But I can't say that I think this market has changed fundamentally. You always get 10, 20, 30% drops in these sort of bull market runs. You look for your opportunity to buy dips. Bottom line for me, as I've been saying for weeks here, crypto right now is a buy the dip market for me until proven otherwise. So I take advantage of all these dips. You just got some of these literally in 10 minutes, you got the 30% dip that people were waiting for. It's pretty crazy.
Amazing. So, Mike, what happened today? Why did we see the stock market, which was trudging along as if nothing mattered, and then all of a sudden collapsed? What the heck happened here?
Oh, it's that failed bond auction. This used to be my life. I don't miss it. Trading bonds. I used to have hair. I was a bond trader in New York City. I was over a counter market maker. I mean, I used to get people and say, "Hey, Mike, it did come in. Can you bid 100 million calls in 10-year notes?" Oh my gosh, that's the kind of stuff I used to do. And so what happened was the bond auction failed. It was a bad, not fail. It was just a bad auction. It's just so much supply coming on, the market can't absorb it. So that's why I'm showing you this chart. And I overlay it with crude oil. But today, bond yields upticked a little bit, but it's so insignificant in the big picture. And yeah, I go back a long time in this chart. My nickname has become McGlone. I'm going to own that nickname because I'm still really bearish on the commodities and the stock market and stuff. And that's, to me, is what happens. We just had that big spike in yields, and then yields pop back up. But in the big picture, I like to show is there's so much room for markets to go back down to just normal reversion. And I can show you a few other charts if you want, but I'm going to show you on the big picture and let you guys focus more in the shorter term. Okay, so let me just show you a few one-click ones. Here's one thing that's really been happening lately is bond yields have peaked with crude oil. It looks like crude oil can go back down to 40. Now, to repeat what was his name? Roger Babson said in 1929, September, I will repeat to you what I said a year before and a year before. So I've been early, I admit that. But one thing that's happening is you see crude oil collapsing. And part of that is because the economy's just falling apart. People don't get it yet. The stock market doesn't get it. But I think cryptos are getting what's happening is, okay, so bonds are not doing well. Stock market's having a problem. man, and not so much as cryptos, but Bitcoin is a nice solution. So this is just looks like crude oil peaked around 95, and I don't see what stops it from going towards 40. And this is leading indicators are all negative. I want to show you a few other charts. A simple little thing that we need to remember where we came from is this is a chart of money supply in white. If you want to see what money supply did, look, it went up, it's going down. Money supply is negative right now. So it's from the end of 2019, the biggest pump in money supply in history. And if you overlay money supply with the stock market, the S&P 500, it's the same level. I mean, it's up like 34%. So it looks like it's starting to roll over. We have the commodity market. Looks like it's just starting to head lower. And there's a good reason that right here you have the Fed still tightening. But I just show you a few other ones. This is something that I really wanted to reserve for this program because people on the terminal see it, but your viewers might not see this as much. We're seeing depression or recession in some of the significant things that's really leads the economy. Gasoline demand in this country is collapsing. That's not so much collapsing, it's declining. Diesel demand in this country is declining. And just a little inside scoop, I've never gotten 235,000 hits on a Twitter before, and I just pointed out diesel demand's collapsing. I was shocked by that. And also one thing is cardboard box demand. That's the essence for everything. It's all heading lower. And
I just want to And I just want to jump in because I think people that are watching want to clarify. So when we talk diesel demand, we're generally talking transportation of goods, right?
Exactly.
Am I correct on that, right?
Exactly.
Okay.
Transportation, I mean, it's the fuel for the economy. It's just the grease that runs the wheels of the economy is diesel demand, and lubricant demand is declining too.
And gasoline declining, is that specifically due to people working from home? Is it that people are losing their jobs even though the jobs data is not showing it? Or is it a combination of everything? Or
yeah, so it's both. That's what I like to point out is gasoline demand was kind of stagnant before COVID. A lot of that was efficiency, thrifting, as they say in my British colleagues. But this is what's happening now. It's pumped, and now it's still heading lower. And Department of Energy estimates are declining. I met one of those members yesterday at a Bloomberg event in New York, and part of it's working from home, but it's efficiency in EVs. I mean, they're really taking off, even though sales are declining lately. But one of my favorite patterns is crocodile jaw patterns, and this is what Scott was just pointing out. You mentioned earlier, Bitcoin breaking out higher and the Russell declining. Now that's the divergent strength we're looking for. That's a great sign. At least now we have some good support to work against with Bitcoin if the stock market continues low, which I think it will. But I just want to show you one of simple little things of where I think markets are going, and that is copper. You look at the price of copper in dollars, you overlay it with the S&P 500, just divide by 1,000 and 10-year note yields. You have a same chart going back like 2008. And to me, everything's going to head towards 3,000 and 3% in 10-year notes, 3,000 the S&P 500, and $3 in copper. It's not a big deal. I'll show you two other ones, and then we'll just play one simple little reason why is just look at the Russell index. This is just a 50-week moving average of the Russell 2K index. Small caps. I love watching the Russell. It's been a consistent indicator this year. For this year now, it's down 4%. Now, there's a risk. I think by the end of the year, the S&P 500 is going to be down 4%. The head of CalPERS, Christopher, I don't remember his last name. He said he thought it might happen. He's the biggest money manager will. And I'll just end with this one little chart. Crocodile jaws. I think there's a good place for the price of gold in gold. And the dollar and the S&P 500, gold in dollars per ounce and S&P 500 to meet, and that's around 3,000. And I think that's macro, big picture. I'll let you guys focus on the shorter term, but to me, that's where the tilt's going. And today is, we got 2 months left in this year. I show how everybody didn't agree with, we had the pendulum swing and recession and no recession, but now all the data are showing that all these hikes from the Fed are really starting to kick in.
Yeah. So let me just jump on here and show this. So this is just a headline I just want to make people aware of here. So Dow down 200 points after Fed's Powell says higher rates may be needed. Plus, like you mentioned, Mike, the weak Treasury auction. So it's kind of a combination. And again, what I was saying just before we went live is that, you see the NASDAQ was up 9 straight days, S&P up 8 straight days. And that's all following essentially, the jobs data and the Federal Reserve meeting where they said, hey, we're going to be on pause here. Right. And so, my thought process is that Powell probably saw that happening. And we know that if the wealth effect comes back, and I mean, heck, what was the S&P up in the last week and a half? Like 6, 7, 8%. that's could be inflationary. People see their 401ks, they feel richer, they want to go buy that new TV now or take that new vacation. And so he's got to talk this market down. Like, you can't have a market running back to all-time highs and expect to get inflation down further at this point in time. So Scott, like, where are we in, are you still viewing, or what are your thoughts going away from crypto to the traditional markets? Do you have any thoughts on that?
I mean, it's hard for me to aggressively celebrate a bearish position after 8 days up when it goes down one day, you know? So job numbers came in pretty much as expected today. And it's like breaking news. Jerome Powell said the exact same thing Jerome Powell always says: let's rock the market. It's so stupid. It makes my brain hurt. Like, the guy's literally never changed his tone. He never implied ever that a pause was going to be a pivot. And him saying we may need some more rate hikes is what he's literally been saying the entire time. So I don't really understand why the market, beyond the fact that we know that the market does this, but there's no rational reason that it should be getting rocked in the way that it did.
And it's almost like the markets were asking for something, right? I mean, when you're up that many days in a row, you could literally count in the last 10 years on your hand how many times we've been up 9 straight days to the percentage.
Hasn't happened since 2004.
Right. So, I mean, it's almost like the market, right? The market was essentially looking for a reason to sell off. And here comes, jolly Jerome Powell and says just something that triggers enough of the sellers to come out. And honestly, part of it too, and I've been noticing this, Mike, I don't know if you've noticed, but the S&P, the volume has been anemic on the last 4 or 5 days. I mean, it has just been
price rising on a non-existent volume is a telltale sign that things are about to correct every single time.
Exactly. Yeah, that's a classic signs, and I don't watch it as closely as I used to. I'll show you on my screen what really happened today. Is this is Fed Fund futures is harder to see, but you see all that red? I'm sorry, all that green. That's yields. All you look back months. This is a front year. You look back months. The markets just started pricing in those hikes from what Chairman Powell said, and I think that's a key thing. That it's just funny. Sometimes the market just needs that 2x4 in the back of the head to be a reminder that, there's a lot of signs they're going to a recession, and bond yields. We're borrowing so much in this country. It's basically a lose-lose situation here. And by the way, the early effects of these rates haven't even started. And we had another governor say that today. To me, that's what's happening. And if that's the case, I think that we're going to just see the stock market follow the Russell and follow industrial metals and copper and crude oil. And the new unique thing is Bitcoin's done this big breakout. I'm just curious if I'm right about the normal key thing that really tweaked me is if I'm right about the normal recessionary decline in the stock market, how's Bitcoin going to respond? It's been doing great so far. But one thing that you really mentioned, Gareth, it really tweaked me later is this wealth effect we had was unprecedented. This big pump in money supply. It was up 42%. That's never happened in history. And people still feel wealthy from their stocks and their homes, their condos. They feel that wealth. And that's been part of the thing that Jerome Powell's been focusing on. So the key thing and that's keeping inflation high, keeping spending high, and keeping, that's one of the key things the Fed has to focus on. To me, that's the problem, is you got to kind of have some reverse wealth effect. And we haven't started that. I mean, not even close. Except in some things like bonds. I mean, but the average home, when your average person 10 years ago, the average median price of a home in this country was $200 or so $1,000, and now it's $400. That's a huge jump. You feel wealthy, but the history lessons of like the Weimar Republic and things like that is these things always revert.
Yeah, absolutely. I just wanted to bring up my chart here real quick just to show again. If you see the rally, this is the rally on the spiders, the S&P 500, and you can see 1, 2, 3, 4, 5, 6, 7, 8 days up, and then look at where we stopped. There was a gap fill here that had just been filled today at the highs, and then you have this upsloping trend line connecting this former low to here and right through this gap and this high here, and we slammed right into that. And again, like you were saying, you guys were talking about RSIs were ridiculous and so forth. So this is always the warning I give to people, because there's a lot of smaller investors who would see this and say, when we're trading at the highs, they'd say, hey, I got to jump on board because this looks like a runaway train. It's a bull market, just roaring. Same thing, by the way, I'm sure happened to many people in crypto today with altcoins. They saw these things running and they think it's easy money to jump on board. In reality, that's very, very risky. When something's rallied that substantial, you have to be careful, right? And so I think it's just warning, making people aware. I used to do that, by the way, guys. I'm sure we're all in that same field. I used to chase, and I almost always would get crushed on it. It's better to buy the pullbacks like we're getting now, right? If you're interested in crypto or the S&P, wait for the pullback. It'll come at some point, and then you can always kind of get involved there.
Something really interesting on that SPY chart, by the way, if you pull mine up really quick, that I just noticed as we're doing it, you got the high, low, lower high, lower low, lower high, lower low. This gave you the higher high by like a buck. Talk about a fake out, right? Because most people's definition is once that makes a higher high in that sequence, you're going up and it's moon time and it's the bull market. That is a massive fake out and liquidity grab right there for it to drop right at that point where it had just kind of made a higher high. I mean, that's really, really interesting to me. Oh, I'm not even showing you the right chart, man. I'm sorry. I'm on ETH. I literally just drew a whole bunch of stuff and I was on the wrong screen.
There we go.
It was this high. It was this, by the way. Sorry, guys. I have a lot of screens open, but then this was that liquidity grab right there. See that slight higher high and then down? That's a hell of a move.
That is a hell of a move. Yeah. What's that moving average just below price right now?
That's the 50. This is the 200. Those are the two that I generally keep on. And we're looking at the daily here. I think the bigger story, by the way, I know you don't know that you want to pivot to crypto, but you had this here. BlackRock registered for an Ethereum spot ETF in Delaware. Last time they registered for the Bitcoin spot ETF in Delaware, it was on the SEC website 7 days later. So this is an indication that we are seeing BlackRock now file for an Ethereum spot ETF. And if you're wondering what that meant for Ethereum, take a look at the hourly Ethereum versus Bitcoin chart, which, by the way, has been in a downtrend sustained for the entire year and more. And now you have the largest volume that we've seen in ages on Ethereum being bought with Bitcoin in a massive 10% move to the upside, which you don't generally see there. And of course, that means that ETH now, this is a monthly chart, but is trading over $2,000. I think if we get above this zone here, it's lights out. ETH is going to absolutely rage and outperform after all the FUD and negativity about Ethereum. It's just been lagging. You got lower highs here consolidating into a flat top. That usually means when that compression ends that you're going to see some serious expansion. So I'm not feeling bearish about much in crypto right now.
The one thing I do want to just point out here on a technical basis, purely technical, but take a look at this chart on ETH. You take the low from November of 2022 and look at how it touches all along here, breaks, and then look at the high today. We went right back to that point right there. So just cool. Again, for me as a technician, I would say, okay, that's resistance until we can break above it and to respect it. But I agree. I mean, that's really good news to start thinking about a spot ETF. I mean, holy cow.
But by the way, if that does show up on the SEC site in a week, that's when the mainstream is going to pick it up. This was just picked up by crypto Twitter today. Right. So, and I also have to say, I love an ascending resistance because you can keep getting rejected higher
highs. Yeah, for sure. That's true. Pull back and then make another push up, make a higher high. I agree 100%.
You're pointing out, I think, what's becoming a bit of the giant black hole for risk assets. Before, I thought it was just U.S. government treasury notes, 2 notes above around the whole space getting 5%. But now you also point out with this advent of ETFs and Bitcoin and ETFs, there is an alternative to what's happening with this massive pickup in debt and trend towards deflationary forces. And that's this, you get the crocodile chart in Bitcoin versus the Russell. But if there's one thing that I think that investors, are starting to realize, okay, this S&P 500, if it just does what it normally does versus copper, I have them on the same scale. You just take the S&P 500 and divide by 100, you got the same thing as $1 per price of copper. It could drop, 80, 90 points in a heartbeat and still be normal based on what's happening. Maybe catch up with the Russell, but it's that timing of these ETFs and Bitcoin and Ethereum, and after the significant correction, it's quite a unique period, and that there is that alternative, and it's that in treasuries. And why, I think people are starting to realize, okay, well, the stock market's been great for a good decade. It's been one of the best decades ever, pumped on liquidity, and that liquidity is still negative.
Yeah, absolutely. In terms of Ethereum, I mean, Scott, are you thinking that Ethereum comes and then we're going to start seeing spot ETFs for Ripple and some of these other ones as well? It's just, or you think it'll stick with this?
I'm not sure. I think that Bitcoin is really obvious. I think Ethereum is slightly less likely, but the grounds for rejecting it would have to be really strong, which would basically mean, I don't know, Gensler finally calling it a security, which he's been unwilling to do. And ETFs themselves are securities anyway. So once you sort of bundle it into that package, it becomes a security, at least that offering, not the underlying. I think what we'd more likely see, to be quite frank, if we're looking at a company like BlackRock, that's probably the most prolific indexer on the planet is that you'll get a Bitcoin spot ETF, an ETH spot ETF. Then you'll start to get top 10 crypto ETF, top 50 crypto ETF, metaverse ETF, NFT exposure ETF. These are way down the road, but I'm saying I think we'll start to see them bundled before we'll start seeing them go much further down the risk curve on individual assets. I mean, people love to point out that BlackRock is one of the largest owners of MicroStrategy. They love Bitcoin. Or BlackRock is the largest, owner of Bitcoin miners. That's complete, utter horse crap. They passively index all of these things, so they have to buy them. It's not an investment strategy by BlackRock to buy Bitcoin miners, and people who think so are just completely don't understand what's happening.
Do you think, at this point, has the SEC basically been neutered? Like, are they totally done, or are they going to make another attempt here?
No, I don't think they're done. It was interesting this week. We saw a story that actually it's been sort of misdirection. The SEC has gone for these huge prolific cases attacking the largest players, but the CFTC has actually brought more enforcement actions than the SEC over the last year, and they're viewed as the friendlier regulator for crypto. And I think on the legislative front, Elizabeth Warren, Gary Gensler, the Biden administration, they're not stopping anytime soon. They're going to keep pushing. I think we'll see something with Binance. We're seeing an uptick in rhetoric against Tether. I don't necessarily think we'll see something there. I think there's problems at DCG. Listen, I think we washed out the worst of it, but I think that there will be more shoes to fall. I just think they're priced in. The difference is that you didn't expect them in 2022, and you're completely expecting them in 2023 or 2024. But I think the SEC keeps taking their losses. I just don't think Gary cares much. I think until the people who have hired him tell him to stop, he ain't going to stop. So I don't really think that's an issue. I just think that nobody really cares when they're pricing these things anymore about the SEC. We don't even talk about the Coinbase SEC enforcement action anymore.
No, I mean, yeah, pretty much you've written it off, or we've all written it off at this point. I agree. Mike, what you just mentioned before, oil at $40. What's the economy going to look like if we have oil at $40?
So that's what it's going to basically need. You can see that in my chart. And I like to point out one of the most significant enduring indicators for 100 years has been U.S. leading indicators, minus about 8%. It's predicted every single recessions for 100 years. And that's not me. I'm quoting economists, and our data only goes back about 60 years on that. But that's the key thing I want to point out about crude oil. It always gets cheap after it gets too expensive. I shouldn't say always, because that's a risk, but certainly since the major pump in the oil embargo, the Arab oil embargo in 73, 74. And that's what I show you here. I see what it's doing right now. It's starting to indicate what's happening on a global basis. I showed you these significant declining things that I've never seen happen. You've never seen diesel, gasoline, and container board declining all in the same pace. It's all like 2008. And the difference is we started cutting rates in 2007. So that's part of my McGlone Great Reset. And typically these kind of things, they're gradually then suddenly. Now we've had a pretty significant backup in bond yields. We still have the inverted curve. We have Powell just beating on this thing. We will stay higher for longer. And market hasn't adjusted yet. So I look at it as crude oil is just trying to catch up to copper. It got most people off sides too long. The war kept a bit of a premium in there, and we're starting to realize, those of us who traded it back when Iran and Iraq were at it, it's a bearish thing for crude oil. So I look at it as this is what I'll end with. I think is important for all of our listeners and viewers is cryptos are facing their first recession, and it might be as bad as the real recession, the big one we had in 2008 and 9. And I asked myself, what stops it? And the key thing is, it's just on the back of the biggest pump in liquidity that's dumping. Crude oil was part of that, and now everything's starting to dump. But the last thing that has, I mean, we've had the dump in cryptos. Okay, we got that, and they're bouncing a little, but we haven't had that dump in the biggest asset, bar none, on the planet. The one, I mean, the most significant leading indicator, and that's the S&P 500 big cap stocks. Russell's already doing it. Key question you have to ask ourselves is what stops it. Typically takes a long lag to Fed easing, and they haven't even started thinking about easing.
Yeah. I just want to show my chart here on oil just because, this is something we talked about last week, the head and shoulders here. And it obviously broke, and we can see the continued move down here. And if you're a technician, again, you can see the calculation of target here. This is a shorter term target. So I think what Mike's looking at is something that could happen over the next 12 months back down to that 40 level. For me, I'm going to start getting interested for a bounce around this $69 to $68 level, which actually, interestingly enough, you can see these lows right in here kind of coordinate with that same area as well. So,
Yeah.
so again, just interesting pattern formation for those of you that don't know head and shoulder patterns. There's your break when it broke the neckline. This is called the neckline right here. And the decline from that point has been from 84 down to 75.5 today. Pretty precipitous decline here. And I agree. I think that people get so wrapped up in these news stories, these narratives, that they ignore the charts, and the charts really can guide us in the real nature of the market action. So
Gareth, I want you, one thing I want you to point about that chart is head over to the recent high around 95. It's an imperfect head and shoulders. So I look at that as that's the head, right? So go to that right shoulder. I like that, how that happened, because it's when you have perfect patterns that usually don't work. You need to hurt the traders as much as possible. So when we got there, we had the most significant long positions and managed money net positions on a global basis of all petroleum derivatives since like a year ago. And I can show you another chart, but now that's all starting to roll over, but it's the true direction now. And it's just a question of how much volatility you're going to get. But those are kind of, I think, the kind of patterns I like more, when you have to say, okay, was there pain to make it difficult for people to hold their positions? I think that's what you showed me there, is people got stopped out and then it went lower.
Yep. And I think that's the key is this gap right here on crude was when you had the Hamas attack on Israel, and then the worry over all this stuff going on. And then I mean, think about if you're a short and you see that happening in the news, the tendency is to cover the short, and you have everyone going long. And then I always say to people is, like I was saying to them when we were kind of going up here, I'm like, listen, if this was such a bullish case and people were worried about this big eruption of war in the Middle East, why isn't oil trading above where it just was a month prior, right? And it wasn't. And that was a telltale sign that at some point it was going to roll over. And sure enough, it did. Japanese yen. Let's look at the dollar yen real quick. What are you guys thinking is going on here? Do you think we're going to continue to see this push through the 150 level here?
Let me do one thing before Scott jumps on that. Trend's your friend. Why should it end?
Right.
I thought it was the trend is your friend until the end and the bend, and when you end your friend. Yeah.
Oh, that's a good one. Well, that's why you're the presenter like that. I'm just a lowly strategist, but I look at it. I've heard this from a lot of strategists that keep calling for peak dollar. I'm like, do you realize how expensive it is to short the dollar? I mean, right now, U.S. rates are 5%. In Japan, they're what, two notes are a fraction of that. I mean a fraction of zero. So I look at it as that's just part of the lose-lose from McGlone. The dollar is the wrecking ball. The yen is part of it. I've heard this for years. People said when the yen breaks down, that's it for the yen carry trade. And I've been involved in this trade for 20 years. I mean, because I used to work for Japanese firms. It was the biggest thing. The key thing is it's breaking down. The key question you have to ask yourself is, why should it stop now? There might be bumps in the road, but there's one key force that will end that. The U.S. has to have a significant drop in rates or drop in asset prices, which means the stock market. And otherwise, it's just going to keep going that way. I mean, it's 150's resistance, and same with the yuan. I mean, let's look at the largest economy in the world. They're doing everything they can to support their currencies because they have to, because the dollar's a wrecking ball.
Yeah. Do you I'm trying to look up the chart on the yuan, but do you guys think we've seen peak rates here in the US? Like, is the 10-year topped at this point, or you think we're still going higher?
Yeah,
I'm really long TLT. So I'm hoping that they've topped. I mean, my bias is that they've topped. Looking at the yen, man, I don't, listen, you can take your bias, just pull up my chart really quick.
Yeah.
I haven't looked at this in a long time. This is the weekly chart, obviously, on the dollar versus yen, right? So this is showing dollar strength versus the yen. If this was like some sort of, I'd be looking for a good old, cup and handle. Right. So we're looking for something like this, and then a massive breakout and above. So like if I was looking at an altcoin chart here or something, which obviously is more familiar to me, if I see a break above that 151 blue sky all-time high price discovery, watch out. For now, it's resistance, but man, I wouldn't short a resistance that's the all-time high. I'm looking for price discovery.
Look at that artwork. You even got steam coming off that cup.
I love it. I could like put a smiley face on it. All kinds of things. Yeah, it's perfect. It's a nice cup. It says, I heart McGlone. You got it. You get the
There we
idea.
go. Well, here's how I look at the year so far. We talk about short covering in crude oil, and you talk about bond yields. There's just so much room. I like to call myself not McGlone, but McMean reversion. The potential for just normal mean reversion, what's happening in the stock market, in crude oil, and bond yields, is so much. If we just enter a little bit of a recession on the back of the biggest height ever, that to me is where the trade is, and that's why we keep reverting over to TLT. Have they beaten the heck out of TLT? Can it get any worse? And what, to me, TLT looks like GBTC did at the end of last year.
Yeah.
Dude, is the McMean reversion going to be the new sandwich at McDonald's for the holiday season?
There we go.
Oh man, good stuff, guys. All right, so 3:30. Let's wrap it up here, guys. Any closing thoughts from you guys?
I stay bullish on crypto till proven otherwise. Everything else, man, I don't know. It still seems like.
So speaking of which, but let me just throw that out to you. All right, so you stay bullish on crypto until what would have to happen for you to change your
I think if Bitcoin starts losing 31, 30, like that area, or if we see like a very, very, very clear rejection of the spot ETF, right? I think there's going to be hopium for the spot ETF, even if the can gets kicked down the road. But if we come to like January 10th and it's full out rejected, I think, we see a massive dump and, the narrative dies and we have a lot to talk about. But for now, listen, we just got above the yearly highs at 31. Yeah, we're almost at 38, but nobody would be surprised to see that tested as support, and that wouldn't be bearish yet.
For sure. What about you, Mike? What are we going to see here? What's some wise words for viewers to kind of go into the next week with?
McMean reversion says the stock market should head lower, yields should head lower. I think that might drag down Bitcoin in the shorter term. But in the bigger picture, there is an alternative to what's happened today with bond yields and all this excessive debt. But overall, my premise remains the same. When you can lock down and guarantee 10% U.S. government two notes in 2 years, it's the hardest thing. This was since I got in New York at an investment conference. It's the hardest thing for Type A wealthy people to do is nothing.
Yeah,
sit on your hands.
Sit on your hands. Yep. There you go.
All right. On that note, guys, we're gonna go sit on our hands. You guys have a great rest of your day. Thanks for tuning in. We'll see you next week, guys. Take care.
See ya.